Good morning, everyone. Welcome to a new week and a brand new edition of the Vetiva Breakfast Meeting. This meeting is brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. Today is Monday, the 12th of June, and on our agenda, we'll be having a rundown of local equity and fixed income markets, and then word on the Ghanaian markets from our partners at IC Securities, as well as some headlines from our partners at Frontier Africa Reports. Before we hear from our speakers, I'd like to remind everyone that this meeting is being recorded and may be shared with third parties. The presentation is scheduled to hold for 30 minutes, and that includes Q&A. However, if due to time constraints we're unable to answer all of your questions, feel free to forward them to us at research@vetiva.com, and we'll get back to you as quickly as possible. We'll start today with the rundown of the local and international stock markets from our global equities desk. Cynthia will give us that rundown. Good morning, Cynthia.
Good morning, everyone. Like you mentioned, I'll be running through some of equities market in the West African space. Starting off with BRVM. BRVM closed the week positive with a 67 basis point gain in Friday's session. This was in line with our expectation as we saw market returns stay positive in 3 consecutive trading sessions, thereby returning a week-on-week gain of 0.95% and the year-to-date improving to 11.01%. The day saw significant improvement in both the volume and turnover, with volume improving by 283% and turnover up by over 400%. Despite the increased activity level we saw, we had more losers than gainers in the session, with about 21 losers and just 12 gainers. However, we saw major price appreciation in names like Sikor, Bolari, Situa, and Safka, which was enough to continue the gaining streak in the markets. Also, names that dominated the markets were Sonatel, Sode, ETI, as we see that investors have continued to trade in line with corporate earnings reports. And speaking specifically to that, Sode Cote d'Ivoire just released their corporate earnings last week, and yeah, we saw increased traction in that space. Going into the new week, we expect market to remain mixed, with alternating days of gains and losses, like we've seen in recent sessions, and we also see earnings release determine market activity, like we've seen in stocks in recent times, where stocks gain some form of traction in terms of demand when companies release their results. Moving to the Nigerian market, we saw the market end the week on a negative note as ASI shed 124 basis points. This significant loss we had in Friday's session led to a week-on-week loss of 57 basis points. The market closed this negative close was on the back of significant losses we had in Airtel, Vitafoam, Etana, and among others. I mean, Airtel lost almost 10%, which is the maximum limit down. The stock lost 9.99% in Friday's session, closing 201 naira, which shed about 66 naira on Friday. Speaking to the positives, volume and turnover increased, although the increase was marginal. Volume only increased by 1.51%, while turnover was up by just 4.85%. We also had equal number of gainers and losers in the session, with 21 gainers and 21 losers as well. Just a quick look at the weekly sectorial performance. We saw sectoral performance across the sectors tracked was broadly bullish last week, as all sectoral indices closed week on week in the positive, with the exception of consumer goods, which lost 32 basis points last week. Leading the pack, however, was the oil and gas sector, which gained 6.53%. Also, speaking on some of the recent news we saw on Friday, we saw Dangote Cement announcing that SEC has approved the renewal of its share buyback program, which will be effective until January 21st, 2022. It will be interesting to see how this will be factored into market activity for the stock in terms of demand and also price appreciation. Our outlook for today and further into the market, we foresee similar trading pattern to persist, where we have some days of sell-offs followed by share price appreciation. We anticipate a mixed activity level in the markets, with the banking stocks likely to dominate the trading sessions. Also, with a few Q2 results expected in coming week, this would also shape a market outcome going forward. That will be all from my end. Thank you.
Thank you very much, Juliet. Next, we'll hear from Omorigi, our fixed income trader on the fixed income and currency markets. Good morning, Omorigi.
Good morning. Good morning, everybody. System liquidity improved significantly on Friday to close at about 149.26 billion positive from the 46.46 billion negative that was recorded on Thursday. Despite the significant improvement in system liquidity on Friday, interbank rate tightened by over 863 basis points as OBB and overnight rate closed at 19.75% and 20.5% respectively. This spike in interbank rate was on the back of the CRRO debit of about 35 billion on Friday, and also the increased funding need as players had to make provision for the FX retail auction that held on Friday. Our expectation for today is that the money market will trade at lower levels as the funding pressure reduces. The parallel market lost about 2 naira on Friday to trade at 505 naira to $1, while the earning window opened at 411.29 naira to $1. The highest rate that was recorded on Friday was about 460.11 naira to $1, while the closing rate was 411.75 naira to $1, which is about a 50 kobo depreciation from where it closed on Thursday. Brent crude gained about 1.93% to close at $75.55 per barrel on Friday. On Sunday, rather, while WTI also gained about 2.22% to close at $74.56 per barrel. The T-based market closed last week on a slightly bullish note as we witnessed interest on the long end of the benchmark curve, especially on the May and June 2022 papers. Trades that were executed in the market on Friday were majorly on the mid to long end of the benchmark curve, particularly the 14th October 2021, 30th December 2021, and the 30th June 2022 paper. That's the newly issued one-year paper, where average benchmark rate declined by about 2 basis points to close at 6.34%. The almost secondary market continued to trade on a flat note as we observe interest on the long end of the benchmark curve. Offers that we were seeing in the market on Friday were on the February 15, 2022 paper, where we also saw trades consummated on the May 31st, 2022 paper. Overall, average benchmark rate increased marginally by 1 basis point to close at 9.5%. The bonds market traded on a muted note on Friday as market players closed out for the week. We also observe offers along the short to long end of the benchmark curve, especially on the 2024, 2028, and the 2050 maturities, but there were really no bids on that end. Trades that were consummated on Friday were majorly on the 2023, 2027, and the 2034 papers, with average benchmark rates remaining unchanged day on day at 12.85%. The local Eurobond space closed last week on a very active note as we witnessed buy-side interest on the sovereigns from the 2025 maturity to the 2049 maturity, with average rate declining by about 7.6 basis points across the traded maturities. The corporate space closed last week on a muted note with few buy-side interest in on the EcoBank 2031 Eurobond, with rates improving by about 3 basis points day on day. Our expectation for today is that the bonds market will trade on a very bullish note as players seek to reinvest their promissory note maturities of about 104 billion that's coming into the system today, while we expect the bullish momentum to moderate further in the week on the back of the coupon and bond maturity inflows that are coming in on the 15th of this month. For the T-bills market, we expect it to trade on a muted note as players shift their attention towards the NTB auction that is coming up on Wednesday this week. That'll be all for fixed income. Thank you very much.
Thank you, Omarike. Next, we'll hear from our partners at IC Securities on the Ghanaian markets, both the equities and fixed income. Good morning to Daniel and Johnson.
Hi, good morning. I'll start with the Treasury bill space. Government of Ghana exceeded its target at Friday's regular Treasury bill auction, following a low investor participation at the preceding auction. Government raised approximately 1.53 billion Ghana cedis, which was 1.2 times the target amount for 91, 182, and 364-day bills. Yields for the 91-day bill dropped by 3 basis points from the previous auction, while that of the 182 and 364-day bills remained stable. On the local currency bond market, secondary market activity was less than stellar last week as the ongoing liquidity crunch continued to limit bidding interest on the market. Offers were seen at the front end and the belly of the curve, with 2022 maturities offered in the range of 17.3% and 17.45%. Offers around the belly and the long end of the curve were showed by offshore investors as they seek to exit the Ghana bond positions. On the other hand, the government seeks to raise 10-year Treasury bond this week. We expect to see participation mainly from local market players in this week's bond auction. Finally, I'll end with the Eurobond space. The 10-year US Treasury yield fell to as low as 1.25% last week, amid growing anxieties that the spread of the new COVID-19 variants will upend growth expectations. However, frontier sub-Saharan African bonds traded downwards on average last week, with the long end of the Ghana curve trading between 100 basis points and 200 basis points lower than the previous week, even though it saw more trading activities than the previous week. The front end and the belly also traded downwards between 50 and 150 basis points. That's all for fixed income. Thank you very much.
Good morning. And in the equities, activity on the Ghana Stock Exchange was lively during last week's trading session, backed by block prints in GCB and MTN Ghana. Bob and Societe Generale were the gainers for the week, advancing by 8 pesos and 3 pesos to close at 2 cedis, 25 pesos and 95 pesos respectively. On the other hand, Unilever Ghana was the sole laggard for the period under review, declining by 33 pesos to 3 cedis. Consequently, the composite index closed the week higher by 0.33 points, with a year-to-date return of 36.62%. For the week ahead, we expect trading activities to pick up in SCB ahead of its ex-dividend date scheduled on Wednesday, July 21, 2021. FML and EGL are also tipped to gain some pesos on the back of demand pressures. Thank you.
Thank you very much. Now we'll hear from Temple Ashadu, our partner from Frontier Africa Reports. Good morning, Temple.
Good morning. And taking up from the eastern part of Africa, where we have Kenya and Tanzania are now looking to fast track their resolution on non-tariff barriers. We know that before now there's been a good trade ties within the region, the East African community, and of course in recent time that has really dwindled. Uganda's agric produce from Uganda to south up to Kenya has reduced drastically in recent time due to quality control. And despite the fact that Kenya and Tanzania are just beginning to renew or re-strengthen their relationship, the trade ties between them has really dwindled in recent times. So now they're looking to fast track that relationship and rebuild it. Tanzania is also looking to come up with Islamic banking regulations. There was an Islamic banking non-interest financing summit that held last week. It dovetailed into the weekend. At the meeting, they came up with conversation around regulations for Islamic banking so that they can optimize that alternative as a means of raising funding for and generating revenue for government, and of course being able to do some projects with whatever fund or proceeds that will come in through such schemes. So that's something that they're also looking to come up with. Africa Union has just appointed Rwanda as the headquarters for New African E-Trade Group. The E-Trade Group is an institution that has an ambition of they have an ambition of supporting some 600,000 SMEs across Africa within the next 5 years. Rwanda is expected to play that, to take advantage, to basically play host to that objective or that initiative. So now the African Union, AU, has given them the approval to kickstart that program. The AFDB has now granted $6 million so deserts to power West African projects. That is a project that the AFDB has been leading for some time. I remember Dr. Akinwumi Adesina has always talked about it. It is basically expected to transform the Sahel region by harnessing the abundant power, the solar power potentials that is domiciled in that area, and that is going to also affect the Chad, Nigeria, and Niger axis, where you have lots of solar energy going forward. We understand that, but the funds, I beg your pardon, the fund is basically to help facilitate the initial phase of that regional energy program. In Ghana, we understand that ENI has just discovered an oil block it's an offshore discovery exploration, basically, and that's they're also looking to get funding for. Southern part of Africa has got Botswana seeking some wooing Chinese investors for coal projects, in spite of the fact that funds are currently drying up for coal projects around the world because of its effects on global warming. And we understand that local financial institutions in Botswana are really giving cold shoulder to the coal projects, but the Botswana government is basically taking a step further to look for investors from China, because as you know, they have over 200 billion tons of untapped coal reserves, and of course China is a major consumer of these coal products, basically. So that's why they are heading to China to look for those kind of funding from China at the end of the day. In the northern part of Africa, you have Abu Dhabi Islamic Bank looking to create a sukuk company, something that at the end of the day they'll be able to use to raise some more sukuk bonds in the near future. And finally, Tunisia's volume exports dropped in the month of May to 10.4%, and that we understand is due to the reduction in the export of mechanical and electrical products from that country. That's shrunk by around 14% or thereabouts. These are the headlines we can share with you for this morning. Thank you for listening.
Thank you very much, Temple. We've now come to the Q&A segment of the meeting. And if you have any questions and you'd like to speak, you can raise your hand and you'll be given a chance to speak. And also you can use the Q&A chat box on the normal chat box, or if you're joining us from Facebook, you can leave a comment and your question will be read out. I see somebody has their hand up already. Watson, please go ahead.
Thank you very much, Joshua. Just to quickly, I'm sure everyone is in the news, following the news, by the way, but again, we just want to highlight the COVID-19 cases across Africa. Over the weekend, we all got the Lagos State announcement of a bit of tighter restrictions on COVID-19 and why everyone should be safe. The number of cases are rising in Lagos over the last 2 to 3 weeks within Lagos, from about 1% to about 6%. Infestations are rising. The number of folks turning themselves into isolation centers is rising by the way. So everyone would need to be very, very conscious of the COVID-19 in religious places, in closed places, and all of that. So Lagos is coming down a little bit hard, and that we need to take on board. Yesterday evening, President Ramaphosa in South Africa extended the tight COVID-19 restrictions. The whole alcohol ban in South Africa has now been extended. It's an all-out face-off between the alcohol producers or brewers and the sellers and restaurants in South Africa right now. Over the weekend, they published how many millions of lives are impacted in South Africa because of the alcohol ban. Tens of thousands of workers in the industry are also getting hit. It's going to hit the economy. So that is the story. Then you move on to Tanzania. Now we have about 300% increase in COVID-19 cases in just 2 weeks. Now, this plays almost to the same situation that the Lagos State Governor, Babajide Sanwo-Olu, spoke about over the weekend. In the last 2 weeks of the first 2 weeks of July, the last 2 weeks, up until yesterday, the number of cases are rising. So we need to take this on board and know that this, one way or the other, will begin to have impact on economy and investors' sentiment. We're beginning to see that in a number of countries around the world. In Asia, some of the markets are getting impacted because of the hard virus lockdown which has happened. So everyone needs to stay safe, but we also need to see how this plays into our investment horizon and all of that. And we know analysts at Vetiva Capital will look at all these issues down the week or so, and we'll definitely come up with something for investors to take a look at. Thank you very much, everyone. Good morning.
Thank you very much, Boasin. We have a question in the Q&A chat box from Emmanuel. He says, how is the expected inflows into the system likely to affect money market rates and bond yields in coming weeks? I'll let the income traders answer that question.
Okay, thank you very much for the question, Emmanuel. So what we have seen so far was that at the last bond auction in June, we noticed that there was strong demand on the back of the liquidity that is meant to come in July. And also we noticed the strong market rally. I mean, 2050s closed at about 13.7 levels, and it rallied up until about 13.05, 13.1 levels, which is a strong rally. But after that, last week, we started to see some retracements as short players started coming to the market. There's a bond auction next week, and we believe players are starting to take position against that. So the rally that was expected, we have seen the first leg of it. We've seen some level of retracement. Again, we believe today, tomorrow, given that the bulk of the liquidity will be coming in on Thursday this week, today, tomorrow, we'll see some buy side, but we don't see it as aggressive as we had seen just about when the bond auction closed. Again, because supply will be coming in from the bond auction. And the calendar that was released last week had some level of, the upper band was a bit more aggressive, just slightly. when compared to the previous quarter's calendar. So on the back of that, we see again, very soft market performance, some retracement on the back of the supply from the auction, but regardless, we'll still see some buy side plays with respect to the bond yields. So again, we'll see better than the 1305, 1302 levels, pretty much is what I'm speaking to. For the local, for the money market, we would expect that CBN will continue to use CRR to take out funds from the system. We understand that there was a CRR debit on Friday, and that will continue. So money market, the yields will remain up there and will continue to sing in line with FX retail auction and any other system debits. But money market yields will remain up there. Bond yields will see swings. There's a prime market auction this week. We expect rates to also moderate on the back of the strong liquidity that will be in the system. And that's our view for the near term, pretty much. I hope that answers the question. Thank you.
Thank you very much for that answer. If there are any more questions, feel free to raise your hands or to leave them in the Q&A chat box. All right, it seems as if we have no more questions for today. So it forces me to remind everyone that tomorrow we'll be having a presentation from Chima Ukadike, our consumer goods analyst, on international breweries. This presentation will take place at the same time, 8:30 tomorrow. So please do join us for that, what promises to be an exciting edition of the Vetiva Breakfast Meeting. With that, we have come to the end of today's meeting. Thank you everyone for joining us. We hope that you have a good day. I urge you to continue to stay safe. Good morning.